It's Wednesday, March 5th. Let's level up. I had mentioned I thought the State of the Union was benign. The big Megillah is going to be on Friday with the jobs report and Powell speaking, oddly enough. We saw the VIX move above the 2308 to 2376 range. We stalled just shy of the 2651 level, and now we're back below the 23s. Very simple. You could either use that 2376 or even high of day at 2484 as a must-clear zone for still lower prices short-wise. The pullback could take us down to the 1936, and then we'd see if we did the full Monty down to the 100 MA, that's 1717, and then that's also an ILC spot. With regard to the ES and the NQ, we actually had tweezers on the lows. That's basically long-tailed bottoming tail hammers back to back. We have a potential inverted head and shoulders on the Qs, which would need to clear the prior day's high at 20,732.75, and if that can clear, probably have a move up to closer to 21,000. I see there we weren't able to repair the underwater close from that session at 20,792.5, and we stalled just on that 20,694 old support and 200 MA 30-minute. 200 MA 30-minute is a must clear and hold for the bulls. Similar situation in the ES, although we didn't make it to the 200 MA 30-minute. They were able to close above the 5,800. I think anything over 5,809 is fine. I'd feel better above the 200 MA 30-minute, wherever that is, currently 58.80 half and falling. But we did have a higher low today and two back-to-back bottoming tail hammers. So it's very simple. As long as those hammers can hold, it's sideways to higher. Below is obviously sideways to lower with liquidation break potential, because tweezers should signal the end of an auction, at least short term. And if they are broken to the downside, there's usually a much larger liquidation break. So that's a very simple setup there. With regard to the SPY, we've now had two look below and fails of 597.35. And I see the resistance coming in at about 589.82 to 590. I think if that were to clear, we could see 592.74, and then maybe even a move back up closer to the 597s to 600, which I think will be very tough resistance to get through. Anything back below 575.35 negates the look below and fails, and could just be a failure, and in that instance we would come still lower. I don't know that the 200 MA would hold it, currently 571.39 and rising, because that has not been touched just yet. We've come very close, but we've come so close that I don't know that it would be support now. It may, but it doesn't seem that way. The next big supports on the downside would be 565.16 and 612 Fed day high at 544.12. As far as the Qs go, they got a nice bounce. They did get the 200 MA and actually now had two tests of it both yesterday and today. Anything over 499.70 I think is still fine. The next upside resistance would be the 508s, and then probably closer to the 514s, but I would be a trimmer into those levels and be very careful if we can't hold 499.70. Today's VWAP is 497.91, so if you want to give it a little bit more rope, I'm good with that, but below there is not so great, particularly if it sticks. If it's just a morning gap down and we trade back up above it, that actually strengthens the tape to me because it's another look below and fail. But if the look below and fail fails, it's lower. And on the downside, again, I don't think the 200 MA would hold it. I think we're looking at 481.30, which is the 50% fib, and then probably the 918 gap fill down at 471.44 to the 61.8 of the range at 467.65. Apple has been trying to buck the trend, but it's been very shaky the last couple of days. I think there's a lot of tariff fears. The 200 MA never got tested there at 226.61. I'd feel better over 239.74, and then really over the 61.8 at 244.54. Tesla has been getting hammered lately, but did get into the JP support range between 251.44 and 271. Anything, in my view, over 271 is fine. Better over 280.33, which is the 200 MA. If that can clear, we probably see the 10 MA at 302.70, and then we may make a run to the prior swing low at 325.10. Yesterday, I highlighted NVIDIA had a look below and fail of the 113.01. Higher low today. If you're long, you could raise your stop to today's low of day at 114.51. On the upside, I think we could target the 126.54, which is the 38.2 of the range, from the 1.7 all-time high to yesterday's low at 110.11. I had cited Okta as likely being a professional gap in the midweek video yesterday. It had the follow-on we were looking for today. We are now at channel high. I would be a trimmer right here, right now at the 116s. If Anchor VWAP is up at 121.62, so have some orders up there, maybe a little bit ahead of that, because we're just retail traders and we don't always get the best fills, particularly with no commission brokers. I think if you're already long, I would use the 113.18 VWAP as a stop. Gold has been very strong lately. I still think that the 20 MA is a good raise stop now at 267.91. Our end range target would be 271.29, which is the 2 times range of the failed triple tap head and shoulders. Bitcoin getting a little bit of an adjustment back higher today. I think it's fine as long as it holds 90,698. I would be a little careful below there. That's the 38.2 of the range. If it can clear, I think we're going to see 92,819, which is the 20 MA, and maybe even the 50% fib of the range again at 94,413. I had said to be very careful below 100,000, and we've been on caution since the 121 look above and fail of the 108,960. But we do have a potential inverted head and shoulders here. The problem is that there's probably some resistance now up on that gap up high from the crypto reserve news at 95,705. I think the US is getting a little bit of selling as money is flowing back into Europe, because when the Ukraine war ends incrementally, that's going to be growth positive more for Europe than it will be for the United States. If you want to do something with Germany, I'm good with that, although it's already up a lot. That's the EWG. I think pullbacks to 36.49 and the 20 MA, wherever that is, 36.13, are buyable until they're not, but we're already run a lot, so it's a little bit of a tough chase, but I think that explains the rotation. Generally speaking, up opens continue to get sold into. Often we see an intraday bounce, though, because traders play long after the market has already been down and we're already a little bit oversold intraday. That closes tend to be key. We're bumping up against some very key levels here. It's still to be determined if the breakdown actually sticks. So far it has not. We came down from the top. Remember, we had the look above and fail of the range, so now we have look below and fails of the range, and we're back into the range. Technically, if we continue to have these look below and fails of the range, we could, believe it or not, rotate all the way back up to the highs again and play this whole game again. I've been adamant so far this year that I think we're in a range-bound market, at least for a while, and I will continue to trade the range as long as it works, because traders do what works until it doesn't. Like and follow for more.